Can you talk yourself into a recession? Just talk yourself into it? Unfortunately, the answer is yes. See, an economy runs on confidence. Business needs confidence so they can take risks. And this endless chatter about a potential recession can erode that very confidence. When I say the only thing we have to fear is fear itself, thank you, FDR, that doesn't mean we have nothing to worry about. The palpable sense of fear is extremely worrisome. So far, I've resisted the recession talk on the show because when you look at employment growth, consumer spending, demand for money, Walmart, they've been incredibly positive. There's been no let-up at all in hiring. Frankly, I think the shortage of workers in this country remains a bigger issue than unemployment right now, and that's highly unusual. You heard that both from Jim Fish of Waste Management and Susan Salka of AMN Healthcare Services this very show. But in the last 2 weeks, we've seen a serious erosion of that confidence. I've been telling you that an outright recession is unlikely, but a slowdown, possibility. With $40 trillion bond market behaving like a small-cap stock experiencing a short squeeze, we need to take that possibility seriously. It can't be ignored. Now, I'm getting criticized all over the place, particularly on Twitter, for being too cautious and for changing my mind on a dime. You know what? When the facts change, I change my mind. And it's the bond market that changed on a dime, and that's crazy. It's not supposed to happen, people. We went from a relatively normal bond market where long-term interest rates were higher than short-term ones. That's the typical equilibrium. To a bond market where long rates shot right through short rates like a machete through butter. As someone who used to trade bonds, I was shocked by the move because it was so out of sync with what we're seeing in the stock market. The thing is, stocks normally do take their cue from the much larger bond market, and now stocks are starting to confirm what bonds are saying. After yesterday's decline, stocks are saying that the odds of recession have increased, perhaps dramatically. And the winning stocks today were largely the staples that have done well in recessions. Call it ineluctable. It'd be nuts to stay as positive as I was, or frankly, that I would like to be in that scenario. However, I can and will continue to be constructive because I don't hear that on other shows at other places and other papers. I like to be constructive. To put it another way, I'm now being inundated with questions from regular people on the street, in my restaurants, wherever I go, wherever I do. And the question is not, will there be a recession, but when is it going to start? I can't blithely dismiss the possibility one of the paramount clues, the inverted yield curve, is screaming that it's going to happen soon. Just some people say it's a year, some people say it's 18 months. I say nonsense. Now, I've said over and over again the yield curve could be wrong, but day by day confidence is eroding. Eroded by a Fed that tightened too quickly and remains unwilling to own that error. Eroded by a trade war that shows no signs of ending, even if you believe it's necessary evil, as I do. Eroded by a belief that some of these Democrats running for president are not exactly friendly to big business, and they might win. Right now, we are talking our way into a recession for certain. Can we talk our way out of one? We can't, but the Federal Reserve can. Fed Chief Jay Powell could come out today, next week, wherever, and say he hears what the bond market's saying. So he'll give us as many rate cuts as we need to get right back on track. The president could de-escalate the trade war, please, or at least maybe make it less visible, maybe more back room where he can get something done. And the president's got to stop bashing the Fed, for heaven's sake. If bond yields keep plummeting, it might not matter. We'll scare ourselves right out of this terrific multi-year expansion for certain. But a recession, that's not necessarily on the table as long as the Fed acts aggressively to ensure a soft landing. Something I genuinely believe is still possible, but might not be for long. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.